Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. We know there's a lot of challenges facing the electric vehicle market right now. Supply is increasing across the board, whether you're talking about at legacy automakers or electric vehicle startups, and demand may not be growing as fast as supply is. That's going to put a lot of pressure on prices, which we have seen in margins and net income. But one question I have is, can a company like Ford compete? Because there's been a lot of news in the last few weeks alone about the company's products and how successful they are in the market. So that's what I want to dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And if you're in the Washington, D.C. area, check out an event I'm doing called Money Collaborative with a number of other creators. We're going to be getting together on August 18th. So check out the link to that in the show notes if you're interested. Now back to Ford, I want to highlight a couple of recent comments that we've seen in articles. This one is from Inside EVs. And here a dealer is quoted saying that Ford has got a real problem with their electric vehicles. The number that jumped out to me here is that there was only a 12% increase in electric vehicles sold by Ford in 2023, despite the fact that the market continues to grow. Supply challenges are not what they were a year ago, and the company should just continually be growing, especially with the F-150 Lightning being available, with the Mach-E, but that's not the case. And one thing that we have seen recently, this just was announced this week, is that Ford was cutting prices for the F-150 Lightning by as much as $10,000. Across the board, the cuts were pretty close to $10,000. So I think that's roughly what we should be thinking about. The truck will now start at about $50,000. Now, this is still a higher price point that Ford initially said that was going to be available for the F-150 Lightning when it was announced, but notable that they're reducing prices. This follows similar price reductions for Tesla vehicles, which have come down by about $10,000 just in the last 3 or 4 quarters. The challenge for Ford right now is that the Mach-E, which is under the Mustang label, and the F-150 Lightning are basically their two best shots to get into the electric vehicle market. These are both big brands for the company. They're both designed to be pretty widely adopted by customers that are familiar with Ford, but they're simply not selling. And that may be because there's not enough demand for electric vehicles from Ford, but it's also probably the case that Ford is mispricing these vehicles. The prices are still significantly higher than a internal combustion engine vehicle with similar specs. And that's just not what's selling in the market right now. Electric vehicles are on par with competing internal combustion engine vehicles from a price point standpoint. This has been a big shift in the last year, particularly as the cost of Tesla vehicles has come down. And the competitive reality is that, especially for something like the Mach-E, Ford is going to have to compete on price. That's just the reality of that market. And that means that margins are going to come down. It means that they're maybe not going to be able to ramp up production to lower their unit economics in the way that they would like to. Management did say that part of the reason that they were able to lower the price of the F-150 Lightning was that they're starting to reach scale. Now that sounds great, but we're also not seeing that in the numbers. So as they reduce the price, as it comes down closer to $50,000, now with the tax credit, people could get into an F-150 Lightning for closer to that $40,000 number. That's maybe more compelling for a lot of buyers. But do those buyers exist? Is there demand? There simply may not be right now. And I think that's the reality that a lot of these legacy automakers are facing, is that demand for electric vehicles, specifically from them, and especially just rebrands of existing vehicles, may not be selling all that well right now. And so Ford, I think, of all the legacy automakers, is probably in the toughest position because the vehicles that it has made seem to be running into a number of problems, both with demand. We've seen some cost and quality issues with the Mach-E, and the F-150 Lightning, which I think was a pretty compelling vehicle, just isn't getting a lot of love for customers. So if you're looking for Ford to make a transition to electric vehicles, this year might not be the year. And I don't see a lot coming down the pipeline to get very excited about. So if you're into EVs, Ford may not be the way to play it. The good news for them is that they have a very profitable existing legacy business. What do you think about Ford's future in EVs? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing, and thanks for watching, everybody. See you here next time.